How is crypto mining taxed? How about when we lend versus borrow crypto? Or when we use credit cards with crypto rewards or crypto debit cards? Hello, I'm Crypto Casey, and in this video we are going to explore how taxes work with mining, lending, credit cards, and much more with Lorenzo ABBATIELLO, an expert and industry leader in cryptocurrency tax and crypto tax planning. If you want to see more content like this where we interview professionals in the cryptocurrency world to help us on our crypto journey, let me know by liking this video, subscribing to my channel, and clicking the bell notification to stay up to date on all of the latest content. This is part 5 of our interview with Lorenzo, where we focus on taxes with borrowing, lending, crypto credit, and debit cards, as well as things we should understand as investors and stay mindful of throughout the rest of this year while trading. Lorenzo is offering us a free 15-minute consultation with him about our crypto tax situations, so if you would like to redeem his offer, be sure to scroll down and use the link in the description area below, or use the QR code displayed on the screen. Awesome, so let's explore taxes on mining, lending, and more with Lorenzo, a certified public accountant that can actually give us financial advice. All right, so we're gonna shift to another category that affects some people, crypto mining. Are mined coins taxed twice as regular income and capital gains?
I love miners. Mining taxes is fun because people, what I love about it is you're reinvesting your money in and you can take deductions to business. And that's one thing that everyone should have in their life is finding ways to turn their lifestyle into a deduction. Now, what's nice about mining, and mining is actually one of the areas of crypto I find there to be more clarity on what to do. And because it's defined as a business, you have the ability to take depreciation. You have the ability to, obviously this is clearly a business, you can take deductions. So yes, it is taxed twice because you look at it like a business. You're getting income. Once you have that income in, you're putting in the form of cash, right? It's like cash. Think about it, if I have a restaurant and every day I get cash, yeah, I'm paying taxes on those sales. And then I have that cash, but in the crypto space, that cash can all of a sudden go up and down in value. That's the difference. That's the difference between mining and a regular business. Is in regular business, I'm getting fiat that stays at 1. Mm-hmm. This one, I'm getting this money, I'm doing this service, I'm creating this business, this service to build more and to create more crypto or assets. Once I have those assets in my hand, then they change in value. And that's where the second part of taxation comes in, is once I made it, how much does this change in value in time? But what I love about the game of mining is you gotta buy equipment.
So is mining equipment tax deductible? How, and can you explain more about that?
Yeah, so this is why I love it about it. It's a great tax planning tool, okay? And this goes with anyone who's made a lot of money. Nodes and mining are a great tax planning tool towards the end of the year. Because if you've made money, let's just go with the example, let's just stick with using $100,000. You made 100 grand and you're up 100 grand and you're like, I don't want to pay taxes on this. I mean, especially if you have a good paying job and you're already in a high tax bracket, you're gonna owe 30, 35 grand in taxes. You're like, man, I don't want to pay 35 G's in taxes, but I have a little money on the side. Go and put towards the mining and take a deduction for it. You could take it all in 1 year with the section 179, or you could depreciate it. Now, depreciation, this is where I think the only one really area where I'm there's a little bit of gray, is I find the life cycle of mining equipment to be much smaller than the normal computer. You're abusing these things. I'm thinking 3 years and they're done. So I'll aggressively depreciate, and that's like one of the different areas that can be that can change potentially, is how fast or slow do you want to depreciate the mining equipment. But it is not, there's no wishy-washiness in the fact that you can 179 it, take the deduction all in year 1.
What information as a miner do they need to provide to an accountant?
You have to create a P&L. Some people do this in QuickBooks. Some people do it just out of Excel, but you have your income, you have your expenses, that equals your profit. That's all you need to give a CPA to determine how much taxes you're going to pay. And then from there, You then go into the tax planning phase. Like, okay, this is how much you made, this is how much you're gonna owe. It's like, okay, how can we adjust this? How can we change this? How can we legally save on your profit? Just like you could do with any business.
All right, so what about lending, borrowing, and loans outside of margin? What's taxable about when people lend their crypto?
Lending crypto. If you lend out your crypto, there's two examples, right? Getting a loan and getting money, and then also lending out your crypto, because that's obviously an option as well. So when you lend it out, you collect interest, just like you would in any sort of financial transaction, collecting interest income. You're going to reward, you're going to get income from that. You pay income taxes on the interest coming in. Now, pretty straightforward, right? On the loan out, loan coming in, let's say I go to BlockFi, I need to get a loan, I put a couple Bitcoin as collateral. Let's say I receive 100,000. I'm not taxed at the 100,000. Loans are one of only few words in mortgages, or few words in the IRS tax code that are not taxable. If you're going to get money in a loan, it's like a mortgage. If you get $1 million for a house, you're not getting taxed on $1 million. Just it's a loan. So you get that money in. There's no taxable event. The interest that you pay can be deducted as interest expenses, deduction, and you don't pay any taxes on any of this situation. If the market drops and your collateral gets taken because of the loan, that is a loss. You could take that as a loss.
So some people are wondering, can we use borrowing to decrease our tax liabilities legally?
If you already have a tax liability, no. What I would say to use borrowing for, and this is actually now going, I would say this is going to an advanced technique, right? It's like a little gem to the community. So use borrowing and leveraged money in your favor if you have a very complicated tax situation. If you owe a lot, you can leverage your money with loans to pay off tax bills and still have your money invested. So
got it.
That goes both in the crypto space and the traditional fiat space. So one thing that I have relationships with a lot of private banking at the major banks and whatnot, and something that's really cool that they do is, let's say you have some money in the traditional fiat system and you join the private banking program. This is more of a higher end solution, but you can take loans off of money you have invested in the market. So you can be invested in the market, take a loan off, pay your taxes, let the market build and pay off your loan. So now you're leveraging your money to make money and to pay off debt when you maybe don't want to liquidate a position that's down to then pay off taxes.
Interesting.
Strategic way to pay off your taxes and not have to liquidate anything that's down, or liquidate an asset that you feel has potential to run.
So let's just say people have bought crypto and it was at the time worth $10,000, and then it grew to $100,000. They're holding it, they're not selling it. If they decide to take out a collateralized loan on that $100,000 to pay off taxes, to use for a vacation, whatever, is that a way that we can legally kind of realize gains without paying taxes through borrowing?
Yeah, you could. Well, it's not realizing gains, because if you realize gains, it would be a taxable event. But you can take some of your fruits out, and use that money for whatever you need. And I would always be weary. It sounds sexier than it is. They're not cheap. It's not cheap to loan off your crypto. It's much cheaper to loan off money in the traditional fiat world than it is to loan money off in the crypto space. So I understand it's sexy, it's cool. You don't have to liquidate your crypto. You keep your Bitcoin, but you really have to be careful and run the numbers to understand if it's worth it for you. Yes, there's always that capital appreciation that you don't know, right? That's always the X factor. But in terms of just straight interest and costs, it's definitely more money in the crypto side than you do it in the traditional side.
Is that interest that people are paying on crypto that they're borrowing against, is it tax deductible?
Just like a mortgage tax, interest is tax deductible. It's a loan. Any loan interest is tax deductible.
So if you would like to take out a strategic loan against your crypto, the best resource available right now is BlockFi. BlockFi allows you to borrow money at rates as low as 4.5% APR, and as we just discussed, all interest payments are tax deductible. With a BlockFi loan, you don't have to sell your crypto to get cash, which allows you to continue holding your crypto while it, more likely than not, over time increases in value. If you use the link to BlockFi in the description area below, you can get up to a $250 Bitcoin bonus. So scroll down to check it out, or feel free to use the QR code displayed on the screen. BlockFi loans are fast, allowing you to receive funds on the same business day that they receive your crypto collateral. They are secure, and you can pay off a portion or the entire loan as early as you want with no penalty or fee. So consider using your crypto for a BlockFi loan to pay any taxes you owe, reach a financial goal, or any other strategic move for your unique financial situation. Cool, back to Lorenzo. All right, so a lot of people are asking about crypto credit cards. We've got fiat-backed credit cards where they're getting crypto rewards, but they also have crypto debit cards where people are actually spending crypto in order to buy goods and services. So I guess let's start out with the fiat-backed credit cards where they get crypto rewards. Are there any tax implications for those?
So this is an area that I've been getting a lot of questions on, and currently I'm treating it this way because there really isn't a right and a wrong, right? If you get rewards, it's actually considered income. You're going to pay taxes on it. So like Coinbase, for example, has this 4% back on certain coins. It's great, right? Get 4% back, but you're going to claim that as income, right? It's going to come in as a reward, coded as a reward in the crypto software. And then once you get that, it establishes a basis. If that basis then grows, let's say you got $50 in rewards this month, and that $50 turns into $100, you're going to pay capital gains on it. So technically you're taxed twice.
So if you're interested in a credit card where you earn crypto rewards that actually grow over time on every purchase, check out the BlockFi Rewards Visa Signature Card. With it, you can earn an unlimited 1.5% back in crypto on every single purchase. There's no annual fee, there's no transaction fees, and if you use the link below, you can earn 3.5% back in crypto during your first 3 months. Also, every purchase over $50,000 you spend per year will earn you 2% back in crypto on every purchase. So be sure to scroll down to use the BlockFi link below, or feel free to use the QR code displayed on the screen. Nice. Back to Lorenzo. All right, so how about crypto debit card transactions when people are actually spending the crypto attached to these cards?
It's a taxable event. If they're up, let's say for example, if I put 10,000 to Bitcoin and now it's 50,000, and now I'm swiping away because I made all this money in my Bitcoin, and now I'm like, I need to start using some of it. If you buy something that's $5, you're gonna have $4 in capital gains, because that $1 you spent, you made 5 out of now. We're going 10,000 to 50,000. So if you spend $5, you're gonna pay gains on it. So it ironically creates taxable events by paying for goods, but you made money on that, so you have to pay for it, right? Because that's what makes things simple in fiat. It stays stable or relatively stable, so you don't have to record these transactions on an ongoing basis.
Right.
And as mentioned, these softwares really are going to help you do that, and they're going to get better. It's a little complicated now. It's a little difficult, but you rack up transactions. You really if you look at the prices of some of these softwares, they generally charge for higher transactions.
Amazing. So if you're interested in trying out a crypto debit card, Crypto.com has a great card you can use with no annual fees that gives you 8% back in crypto rewards that you can choose to top up with fiat or crypto. So if you use the link below to sign up for Crypto.com, you will receive $25 worth of crypto for free. So scroll down to check it out, or use the QR code displayed on the screen. And if you need a cryptocurrency tax software solution to make calculations on your trades, check out CryptoTrader.tax. CryptoTrader.tax at the time of this video is still CryptoTrader.tax. However, they are rebranding soon to their new name, CoinLedger. So make sure you scroll down to the description right below to access the correct and official site, or feel free to use the QR code on the screen, as we will keep the links up to date for you while they finish up their rebrand. You can use the platform for free. You can import all of your transactions and see your complete gains and losses for free. and you only have to pay if you want to download your tax reports for filing. Sweet! So that was part 5 of our interview with Lorenzo exploring taxes on different crypto activities. If you missed part 1 where we explore tax reporting basics and the importance of filing an extension this year while we await further clarification from regulators, you can check it out now by clicking on the link above. In part 2, we talk about how crypto trading, bot trading, and margin trading are taxed. In part 3, we discuss tax deductions, losses, and how we can legally decrease our tax liabilities throughout the year. In part 4, we discuss taxes on DeFi activity like staking, airdrops, NFTs, ETFs, as well as giving and receiving gifts in the form of cryptocurrency. And in the rest of our interview, we dive into topics like IRS red flags, using foreign bank accounts, and what to do if you can't afford your tax bill. So be sure to check it out. Remember that Lorenzo is kindly giving us all the chance to have a free 15-minute consultation with him about our crypto tax situations, so please be sure to scroll down and check it out, or use the QR code displayed on the screen to redeem his offer. Awesome. Thank you so much for taking the time to watch this video. If you enjoyed the content, please make sure to like this video, subscribe to the channel, and click the bell notification to stay up to date on all of the latest videos. So what did you think of part 5 of our interview? Are you considering checking out a BlockFi crypto loan to pay your taxes? Are you going to start earning crypto rewards with the BlockFi or Crypto.com cards? Let me know in the comments below. Be safe out there.